Hey, good morning, guys. Mike, aka Crypto Jewels. We're going to do a AGIX video update. It's been a few days since we did the last one, and it has so far been following through to the downside as expected. So let's just hop in. Let's look at the macro first, and then we'll dive into the micro a little bit. But guys, real quick, I just want to shill warning here. I am updating, or not updating, I am creating my online course, which is basically a trading course that goes into details of my trading style and how I trade, and teaching basically my trading style. I will be launching that hopefully within the next 30 to 45 days. And for anybody who signs up early to get notified of the launch, you will be the first to be offered the video or the course, and you will get significant discounts and other special offers associated with it. So if you do have interest in that, click the link below this video for my online course and sign up to get notified once it's launched, and you'll get special offers. All right, so looking at the macro first on AGIX, which is SingularityNET token. This thing, I believe we have a impulsive structure off of the low here, which is putting in a potential one wave structure, which is a possible trend reversing structure, reversing, this downwards trend and indicating that we will start a new trend up. So what we really need to see right now is this one wave. I've got us working on this A, B, C, and I will dive into the details on that C wave and where I anticipate it bottoming at here shortly, and then possibly a 3-wave up, and then a 4-wave, and then a final 5th wave, which could take us all the way up to, $45 to $50 or so. Our 3-wave would take us up to about $16, and our 5-wave would take us up to about $45, $50. So ultimately, from a macro standpoint, that's what I'm looking at, as long as this structure holds that I'm going to dive into here right now. So as long as we hold this structure as a corrective structure and do not start to impulse down and break this low down here, then I'm going to assume that we will eventually head up to those targets I just discussed. So as of right now, what I believe we are looking at here is this 1, 2, 3, 4, 5 to put in our larger degree 1 wave. It could be an A wave as well. And then we have this A, B, and then this 1, 2, 3, 4, and now working on our final 5th wave down, put in our C wave, which would then put in our 2 wave. And then from there, we would want to see a impulsive structure off of the low, then a 3-wave correction, and then breaking back above the top of that impulsive structure, wherever that may be. So that's ultimately what we need to see in order to say, okay, the bottom is in. But let's hop in real quick to the micro to see how I've got this thing breaking down, and to see if we can get a good idea as to where our bottom's going to be. Okay, so as I talked about, we had this C wave down, which is this 1, 2, 3, and then this is your 4, and then what I believe we have is a 1, 2. This is likely our 3. We will have this 4 wave, and then we will have one more 5th down. And ultimately, where I would like to see that go would be at least really to this 50% retracement level here, which is about 15.5 cents. So, that's ultimately where I would like to see us retrace to at minimum. Typical fib retracement levels for a 2-wave are 50% to 61.8%, which could take us all the way down to, potentially 11 cents. So 11 to 15 cents is ultimately the zone that I believe we will retrace to. At the moment, it's not really looking like it's going to get that deep 61.8 retracement, but it certainly is possible. I would anticipate, more something like this, where we kind of wick below it and then start our impulse up from there. So that would be ultimately what I'm looking for at the moment, based on the way this impulse right now is shaping up. It's already an extended 3-wave. So I don't think we would get an extended 5th. In crypto, that's certainly possible, but I wouldn't look for an extended 5th. I would just assume we get a typical 5th wave, which would take us down to, somewhere in the 13, 14, 15 cent level. So that's ultimately what I'm looking for. What would invalidate or signal that this bottom could potentially be in here would be really a break above, around 22 cents. So typical 4 waves retrace 38.2% to 50% of their wave 2. It certainly does not have to go that high, but we did have a very shallow 2-wave here. So I would anticipate a deeper, 4-wave, which a deep 4-wave would definitely be, a 50% retracement, which could be 22 cents. Certainly doesn't mean it has to get up there, but it could, squiggle up and do something like this and then reject from there and then finish our impulse from there. So that is certainly possible. But if we were indeed going to invalidate this and say the bottom is in, I would really want to see a sustained break, a price above this level here, above 50% to 61.8% retracement level, which is 22 to 25 cents or so. If we could, develop an impulsive structure up and break above that level, and hold the 3-wave and then break back above it again, then I would go ahead and consider the bottom being in. But ultimately, at this point, that's not my primary. My primary is that we do eventually get, rejected and then retrace to finish our 5th wave. So we'll see how it plays out, and I'll keep you all updated. See you later.